So hi everyone, thanks for coming back after lunch, and thank you for that introduction. So I guess like many people, I started looking at this space probably two and a half years ago, and coming at it as an architect who focuses primarily on banking and financial markets at IBM, I spent a lot of time looking at Bitcoin and cryptocurrencies from a payment and currency perspective, which I guess has been the focus of most of this event so far. But then I started reading some various white papers that sort of turned the whole thing upside down and said, actually, no, you shouldn't just look at this as a currency system. There's a fundamental breakthrough in computer science, which is all about distributed consensus, embedded consensus, and a new way of registering and tracking assets. So I'm delighted we've got these three projects represented, which I see as just covering the full spectrum. So the first place I want to go is to Coin Prism, which I see as representing, I guess the simplest next step from Bitcoin, which is to say, actually, these Bitcoin tokens can represent more than just a Bitcoin. They can represent anything and can be traded and transacted as if they are something else. So perhaps you could just explain that, elaborate on that be more articulate, and explain what you're doing with your project. Flavien.
So I'm Flavien Charlon. I'm the founder of Coin Prism. And so basically, Coin Prism is a wallet that can be used for like issuing colored coins, receiving, sending colored coins. And so the concept of colored coins is it's quite simple actually. So it's a concept it's a very generic concept. I mean, Mastercoin uses it as well, and Ethereum also can implement colored coins. And there are also chains doing that. But the concept is, if I take the example of, let's say, a gold bullion bank, there would be an issuer of coins. So somebody would go and deposit some gold to that bank, and they would issue colored coins, which would be tokens representing that gold. So every coin could be an ounce of gold, let's say. Then that can be traded on the blockchain. You have it on your wallet, and you can send it or receive it, and so on. And anybody is able to go back to the bullion bank with that token and exchange it for the physical gold. So you can both, so the issuer would both issue the coins and redeem them. So that's the general concept behind the colored coins. And it can work with any assets. It's basically storing assets on a blockchain.
So essentially you could represent any real world asset as you could turn it into a bearer asset tracked on the blockchain. So what's the status of the project? Because for people who've been following this space for some time, there's been talk of colored coins for as long as I can remember being part of the Bitcoin world. And we've seen various projects. We know the Chroma Wallet guys are here who presented yesterday. What's the current status of the Coin Prism project, and how does it relate to the other efforts? Is it a step beyond? Does it have a different philosophical outlook? How do people who, I guess we've got 50% of the audience here is probably VCs, how do they distinguish between these projects and figure out what it is that you're doing that's unique?
Yeah, so the concept of colored coins was coined, I think, in 2012, if I'm not mistaken, maybe a bit earlier. And from there, there was the first project, which was the Chroma Wallet. It was called differently at the time, but it's the Chroma Wallet, which is a downloadable wallet, and they presented yesterday. After that, more recently, so starting last year, so we started working on Coin Prism, which is web wallet, so different approach. And there are other projects also now popping up using colored coins. So yeah, there are different projects, and some of them are not exactly interoperable together, but that's also something that's going to converge with time.
So interoperability is something you're aiming towards?
Say again?
Interoperability is something you're aiming towards?
Yes, okay. It's definitely a goal, yeah. So, and about Coin Prism, so it just launched a month and a half ago, in May. So right now it lets you issue assets, receive and send assets, and the next steps would be to make a blockchain explorer for colored coins.
Okay. Do you mind if I ask Flavien?
Yeah, I do. Thanks.
So maybe you can explain a bit about the difference in the protocol between the different implementations. Right?
Yeah.
What's the different takes?
Yeah. So. Okay, without going too much into details maybe, the original implementation, the Chroma Wallet, it uses normal Bitcoin transactions, which look really like any Bitcoin transaction, and they use order-based coloring, so it's like they take inputs and outputs in order. Coin Prism uses like a different method where we use the op return to encode metadata. And because op return is only standard, it only became standard in Bitcoin 0.9, which was very recent. This is something that couldn't be used before, but so this is one of the main differences between the two coloring modes.
And that's a pretty useful segue because I want to bring Ron in now. So if I think of the colored coin projects as representing assets and tagging, coloring Bitcoins, I think when I first read the papers on Mastercoin, it was a revelation to me because what you seem to be doing was say, actually, forget currency, forget the Bitcoins. What Bitcoin's actually giving is this consensus system. It's giving us a storage service. It's giving us a time stamping service. So it's almost like you're saying, actually, forget half this entire project. We're just going to use it as a piece of infrastructure and then build something brand new on top. So is that the best way to think about it, or maybe explain where you are with Mastercoin at the moment?
That's the biggest revelation around the Mastercoin is we've of course been inspired by efforts such as colored coins. I think we've been around maybe a year before, at least in idea concept level. And again, we saw all the recent developments again in the last few years of all these alt chains, everybody taking the Bitcoin code, forking it, and adding this feature, adding that feature, and each and every one of these altcoins had to worry about security problems, mining. A lot of them were attacked by miners of competing chains. We realized, or JR basically realized, that once you have Bitcoin as the really core central network that everybody uses, then there's no reason to reinvent the wheel. We can just use that as a base level, get all the timestamping, get all the security, get all the mining, and just use Bitcoin transactions to encode arbitrary data. So, yeah, that's we basically take any Mastercoin operation, issuing a new currency, issuing a crowd sale, sending Mastercoins, doing other things like decentralized exchanges. Each and every one of these operations, they use the same Bitcoin addresses, the same private keys. They just sign the custom messages that are encoded into the blockchain.
So what would be a real world example of someone who's using Mastercoin right now? Who's, you say, is your flagship project, your flagship user that shows it in action?
Pamira's mentioned MadeSafe. It was actually a few months ago, not a few weeks ago. But that was the focus for Mastercoin in the last year has been around issuing or enabling users to issue currency or issue tokens on the protocol. So MadeSafe is a very good example of this. It's a Scottish company. They worked for 8 years in their space. They're building a decentralized internet, and they were looking into different business models, right? They were thinking of charging maybe 1% of all fees or other things like that. So when did they realize the power of Bitcoin and decentralized networks or of blockchain technology, basically, then they decided to use the Master protocol or the Mastercoin protocol, issue MadeSafe coins, and then use these to power their application. So they're used in peer-to-peer applications where one person can send these coins directly to another person in exchange for a service that person provides. So this whole area of decentralized applications is one aspect of how people can use Mastercoin. Another aspect is a lot more down to earth, and that's a lot more like the things colored coins have been thinking about, talking about. The most recent example from a few days ago, as cited on the Wall Street Journal, is real coin. Right, that's a coin that is backed by US dollars in a vault or in a bank account. You wire US dollars to that account, you get in return real coins, and you can redeem that. And there's KYC in that process, but after you complete it, you have tokens on the blockchain that you can transact freely, efficiently, quickly, securely.
Mm-hmm. And that's a really good point. So I want to come to issuance in a few minutes because I think there's some legal and I guess sort of security economics questions that it raises that I don't think have been fully explored. So just before I do that, let's bring Gavin in for Ethereum. Maybe just bring the group up to speed, I guess, with two things. One, what is the simplest description of it? Because I think people, even today, you speak to people, they say to them, right, do you get Ethereum? And they nod, and then you say, go and explain it to me. And usually they can't. So
you're not allowed to use Turing.
Yeah, and you can't say Turing complete. So the simplest description of the vision, and then just bring us up to speed on what's the current state, either with the Ether sale or where the project currently is.
Sure. So Ethereum can be thought of in two separate ways. One is the sort of vision, and I'm going to stay away from that for the moment. And the other is the technology. So in a way, the technology provides a generalized computing mechanism for doing social contracts, for creating and for enforcing social contracts. So then the question becomes, what's a social contract? And I think Bitcoin really gave us the first true example of a decentralized social contract. It's the idea of a clearinghouse or a currency system was a really sort of poignant but very simple example of a social contract. So the idea being that, of course, I recognize the fungibility and the value of your Bitcoins as long as you similarly recognize the fungibility and value of mine. And so Ethereum says, right, well, this can actually be represented relatively as a relatively trivial computation. Basically, if I spend some of my Bitcoins, I give them to you, then my Bitcoins are reduced by a certain amount and yours are increased. I mean, it actually implements it in slightly different ways, but we can ignore that for the moment. And Ethereum says, right, well, let's just make that into a more generalized infrastructure, a completely generalized infrastructure for doing arbitrary social contracts.
What would be an example? Because you could say there's a contract that says somebody must do X, but there's then the question of, well, how do you compel them, or how do you resolve the case if they don't? And what fascinates me most about Ethereum is, of the three projects, it's the one that seems to be, and you mentioned social contract, it's the one that seems to get closest to the real world. So, we can agree that I have a certain number of Bitcoins or I don't, so that they're worth something or they're not, but it's within a relatively closed world. But when you look at some of the things that I'm told that Ethereum can do, the implication is the Ethereum system will be telling a human to do something, or the human will do something because Ethereum tells them, and there's nothing that will make that happen. So what's an example of something that goes beyond currency that it could do that these other two platforms couldn't?
So I think it's important to remember that once you have currency, you effectively have an incentivization strategy for getting people to do things. For instance, I might offer a reward for somebody who walks my dog. And then we may have some cunning technological solution so that, for instance, GPS tagging on the dog or whatever it'll be, so that maybe one of a number of trusted dog walkers can take my dog, take them for a walk, and show a little QR ID to a little device on a dog's lapel. And we'll have a way of setting the contract so that that person then instantly gets paid purely literally for the physical act of walking the dog, and you can avoid the unnecessary middleman sort of fees for working out, who walked the dog, when they walked it, whether they actually did walk it, and the rest of it.
Sure. Okay. So, good example. I suppose walking the dog is probably not the top of the must-fix human problems facing humanity, but it motivates the point. I get it. Cool. Okay. So, just a very quick comment on what is the current state of the project. When should people expect to see something go live, something to be available to buy? What should we expect?
We're hoping to commence the Ether sale in the coming, if not days, then a week or two. It's been like this for a while, but we really are getting things sorted now. We've made a few structural changes. We've got the legals sorted, so we're basically happy to kick off. In terms of the development, we'll be shortly releasing our 5th proof of concept piece of software, so client basically. With this you can actually write contracts, test them, go on the test net, interact with other people. We have a number of sort of quite large projects using the Ethereum as their backbone for their projects now. So we have one that's Project Doug. Although I'm not familiar with the nitty-gritty, I help the developers. They're active in the channels, and we given to understand that they're actually sort of using Ethereum to produce a functioning, decentralized state.
So is this the Preston Byrne initiative that entered the competition for the 100,000
That's right.
to replace the foundation? Okay, yes, very interesting.
So yeah, we're at a point where we really can implement quite complex decentralized applications on top of even just now the proof of concept, and we're hoping within, let's say, 6 months we'll have a contender for the final release and ready for the Genesis block to go.
Okay, thanks. So you mentioned the complex scenarios. Let's just go back to the simplest one, this idea of issuance. So I guess this is mainly a question for the colored coins and Mastercoin world. Even if you take the simplest example of issuing an asset onto a blockchain or onto something like Mastercoin, it immediately raises all kinds of legal questions. So if the thing looks like a bond or it looks like an equity, then there are rules in most countries about who's allowed to issue them, what is needed from the perspective of a prospectus, and who's allowed to trade them. And even if that were not a case, there's a question then of, well, in the trust-free Bitcoin world, you don't need to know who anybody is. But in the world where people are issuing things, you are completely reliant on that issuer being who they say they are and being good for their word. Is there anything in either platform that either solves that trust and identity issue, so you know who these issuers are and you can be sure they are who they say they are? And have either project done any work on the legal side of things, so that people issuing things on your platform at least have guidance as to what is and isn't allowed in a particular jurisdiction? So maybe Flavien, you go first.
Yeah, so colored coin is like a technical solution, but you may issue equity or bonds on the blockchain, but it doesn't free you from your legal obligations. So if you issue equity, you still have to make sure that you can do that in your country if it's legal or not. Like in the US, I don't think it is legal to do that. And the way you can enforce regulation, if you need to, is when you go in and out of the blockchain, for example. So in the case of Railcoin, I think the AML KYC procedures are done when you either deposit money there or withdraw the money. And so they know who gets money into the system and gets money out, but they don't know the chain in the middle. But in that case, I don't think it's actually required. So yeah, you cannot enforce what happens within the system, but you can control the gates, like in and out.
Just on that one before we widen it back up. So who is or what is your target market? Because you look around here, so you've got Northern Trust over there somewhere, a big custodian. You've got City GTS, and you've got big custody banks. Is it your vision that they would be issuing or they would be representing securities under their custody on your platform, or is your target market actually startups, or should we not be thinking of the securities industry? Actually, it's different types of assets you're planning to carry.
Yeah, I think there are many applications to colored coins, right? But I think what's popular nowadays is basically what people are doing today is basically what people are doing with Mastercoin, which is crowd sales mostly, and perhaps like currency on the blockchain, which would be different, like fiat currency, for example. That's the easiest use case to tackle. But equity is definitely, it has many legal questions, so it's definitely something that's going to take more time to figure out.
And do you see it as your problem as you're looking for investors, as you're looking to grow the organization? Are you seeing that as a problem you have to solve and that you need an answer for in order to be viable? Or are you focused entirely on the technology and expecting others to come along either with legal wrappers and other companies who've solved that? Where do you see your opportunity and your focus?
Yeah, for now we mostly focus on the technology. Yeah, we let issuers figure out their own problems. If it's their business models. If they're an issuer, they have to figure out what they can and cannot do, and we provide the tools to them, but then they have to use it correctly.
So Ron, I guess a similar question. Is there anything that you're doing on the legal side, I guess anything that you learned from the MadeSafe work, and then also just address that identity question? How do we know who these issuers are?
Yeah, so definitely we've spent a lot of time in the last year, looking at this, talking to lawyers, investigating this. First of all, I'll start from the end. The dice is still out, right? It's not clear what's going to happen. Regulators are just now starting to slowly understand Bitcoin. I think they're very far away from understanding this type of advanced mechanisms. But they are looking at the space that we know. Now, of course, we advise all parties to that issue on these platforms to really check, do their homework, do their legal homework, consult with your lawyers, understand what's going on. What we're compiling our internal databases or knowledge bases that we share with everybody who is interested on, just capture the bits of knowledge that we know. And we're working with an organization called Coda that sort of bridges the industry. I think Ethereum are members, some colored parties are also members of that, because the issues are really cross-cutting. It's not just Ethereum, just Mastercoin, just colored coins. It's the same issues for a lot of these. So some bit of practical advice that I can give. You said that shares or equity or issuing equity on the blockchain isn't legal in the US. Well, we haven't found any place where it is legal. Right, so we're just telling everybody, don't issue equity, don't issue shares, construct your business otherwise. Right, in the case of MadeSafe, they're in Scotland, they have Scottish regulation or UK regulation, but it was never a share, right? It's never a promise of future dividends or promise. it's a token that is used to power an application. Right, that's a very easy thing to do. Like you go on Kickstarter, you purchase an Ouya or whatever game you want to or hardware you want to purchase in advance. So here you can purchase an access key to an application before it's developed. That's one way to do it. Another thing is you can issue an asset that is backed by something real, and in this case, you have the asset, you can be audited, you can be controlled. I don't know anybody who's actually doing equity issuance. Some people are using similar terms, but BitShares, others, we're staying clear of these terms.
It's interesting listening to it. It does strike me that if you're looking for opportunities or other projects looking at this space, the one that cracks that legal side, the one that can is part of their company, say, and also we've got a legal opinion or we have some legal agreement that says these are the things one can and can't do, and actually there are certain types of assets you can issue under this jurisdiction. It sounds like that would give them give them an advantage. Is the sense I'm getting from that. I think I better move on. I guess the next thing I wanted to talk about was, and it was motivated by, I think it was the 51% panel earlier. I think it was Jeff Garzik who commented. He said, let's just be clear, the only coin that's secure or has the chance of being secure is Bitcoin, was his argument. So I really want to cover two areas. So the first one is, what's the Ethereum security model? What's the underlying assumption or belief about the future that means people who build things on it can believe it will be secure? Do you need a huge pool of miners? Is it economic insight? What makes people believe it will be secure given it's not secured by the Bitcoin mining network?
The fundamental philosophy of security is unchanged from Bitcoin. So the idea is that you have a proof of work, you have people who solve the proof of work, and they are rewarded for that. So then the question becomes, how does are we fixing anything, or are we fixing any perceived problems from Bitcoin? And I think to some degree, yes, we are. We're still 100% dedicated to finding a truly ASIC resistant proof of work algorithm. I think the notion of massive investment leading to super linear returns in terms of one's ability to provide that proof of work, which is what we see when we see, what is it, 3 or 4 of the major mining consortiums taking up, what's the percentage?
3 or 4
of total blocks mined? It's quite a lot. It's certainly well above 50. And this is a major issue in my opinion regarding security. With Ethereum, we are trying to reduce the reliance on ASICs to 0, and therefore effectively bring the bar much lower in terms of a realistic return for computation power put in.
Okay. And then it strikes me with the colored coins projects, and I think probably Mastercoin to the same extent, the interesting thing I find there is it's the potential impact your projects have on the analysis of Bitcoin security. So if you take just the simplest interpretation of simplest implementation of colored coins, you could imagine a world where there's, like, say, 5,000 Satoshis or whatever the dust limit is, representing $1 billion in IBM stock. And that's great. I could send that output to somebody, and I'm moving IBM stock all around the world. Until somebody then notices and says, well, hang on a sec, there's 5,000 Satoshis there, that if I can double spend, I can steal $1 billion. Now, at the mining level, that's just 5,000 Satoshis. And there's a question of, well, how interested would anybody be if it did happen? Maybe they'd be very interested because a double spend is a double spend. But from the mining perspective, the economics of spending, the amount of money you'd have to double spend 5,000 Satoshis is not very much. But from the colored coins perspective, it's $1 billion. So there's this mismatch because what's going on in the colored coins and the Mastercoin world is opaque to the Bitcoin system. Is that something that worries you? Is that something you have any thoughts on? Is that something fees can fix? Is it an issue, or am I over-exaggerating?
Yeah, it's definitely an issue at the moment from what we know today. But yeah, one way to potentially to fix that would be to have fees. So the miners would be aware of some of the most valuable assets on the blockchain, and they would accept transactions with a fee proportional to the value transacted. So if I'm sending 1 million shares of IBM, the fee would have to be pretty high in that case, even though that's only 500 Satoshis. But also, this attack is kind of mitigated in some way. because if somebody does a double spend and maybe breaks the whole ledger for one specific asset, what the issuer can do, he can always reissue new tokens that represent the asset and invalidate the previous ones. And he can do that according to time, like few minutes before the attack. So that kind of negates a little bit or mitigates this attack potentially.
Okay. And is it a similar analysis for Mastercoin?
Yeah, so basically the analysis is very similar for both protocols, but I don't agree that. I think that these kind of attacks on whether it's 5,000 satoshis or whatever it is representing the value, I think it's identical to Bitcoin. I mean it's small pieces of data that represent an arbitrary financial value, and it's not easier to attack 5,000 satoshis than it is to attack 1,000 bitcoins. It's still the same 51% attack that's required for both. And the underlying assumptions under all these protocols is that is very, very, very expensive and hard to do. Now, as the Bitcoin economy grows, and I'm including in that all these upper layers, right? If there's value added in there, except just the satoshis, but also in various tokens, as the value of this economy grows, the mining industry has to grow to accommodate that, right? Otherwise, there's a gap in the security.
Understood. Okay, I'm going to, before I wrap up with a few questions at the end, in the last 10 minutes, I'm going to open up 2 questions from the audience, so we get ready with the mics. Any questions for the panel? One down here at the front.
Sure. This is a question for Gavin. So, in the debate between having, ASICs coming out for proof of work compared to just a general purpose computer, sometimes you'll see the counter argument online often is, oh, well, if it's just general purpose computing, then instead of having an ASIC mining consortium, you're just going to have groups of botnets and people running malware controlling a large part of the Ethereum mining. What would be your response to that argument?
I would hope that we improve OS security to some degree. I think that if a sufficient reward is offered, there'll be a sufficient number of people who have secure machines that mine legitimately to outweigh the bots effectively running on insecure and often underpowered machines. But we'll do some modeling, we'll see.
Do some modeling. Any more questions for the panel? Okay, well, while the audience thinks, the thing that I often struggle with is, what's the end game for this project? So I deliberately came at this panel from a technical perspective. So here are things you could do with Bitcoin tokens, here are protocols you could layer over the top, here are the things that Ethereum could do. Where I often struggle, certainly when I'm explaining this internally in the company or to clients, is to say, well, there are all these things you could do, but actually, what would people want to do, and what is the world-changing outcome of building it? So for Bitcoin, it's clear. I can send value from A to B with no third party near instantly, not for free, but near instantly. There's a compelling value proposition. What's the dream? I'll ask this to each of you, starting with you, Ron. What is the dream that motivates you? You're full time on this project. What is it you're trying to build? What's the vision?
So you heard, I think it was Joel yesterday from Swarm, who was asking the VC panel, like, what kind of added value you can give me when I can raise all this money without you, right? So just look at all the financial industry that's developed, in London and all these other capitals. There's so much, like Bitcoin is just the first step. Bitcoin is money. There's so much more activity, financial activity, economical activity, entrepreneurship activity. And we want to provide people with the tools to do that directly, peer-to-peer, in a transparent way, without relying on some central party that enforces these draconian laws and all these convoluted concepts. Basically, it's the logical next step. There's so much activity going on in that space that is just waiting for a way to get to that money. MadeSafe, again, the perfect example. They're a Scottish company. The VC environment, the venture capitalist environment in there isn't that complicated. Money, VCs tend to invest locally. They don't like foreign investments. But here they have a really good idea. They worked for 8 years. They publish their white papers, and they get $8 million, right? Suddenly over 2 days. So yeah, that's what we're trying to facilitate.
that's why you get up and that's why you work on it.
Yeah.
So so I guess Coin Prism is a much narrower proposition than, as I understand it. What's the driving vision? Because I must admit, coming into this panel, I thought you'd say, the world's all future financial transactions or financial assets will be represented on the platform, and the Northern Rock building will be closed, the Northern Trust building will be closed down, and custodian banks won't need to exist. And then you didn't engage with that, as if that wasn't the vision. So what is this driving Coin Prism? What is your market? What are you going for?
So I think, there are many use cases to like colored coin and assets on blockchain, but I think, people always talk about very complex use cases and so on. I think a lot of them actually may not be may not compete with what the world today does. But some of them are very compelling, like maybe the ability to send currencies, any currency, through Bitcoin, through the Bitcoin network.
But then why wouldn't you use, say, Ripple for that?
Ripple is also an implementation of colored coins, right? So I'm just talking generally.
Yeah,
you could use Ripple, but I think it's a very compelling value proposition, because today what you can do, you can do it through Bitcoin, but some people don't want exposure to Bitcoin, or you may want to just transfer a specific currency to somebody to your home country. So this is something that is made possible with colored coin. And that's one use case, and I guess the crowdfunding also I think Mastercoin has showed that it's something that people want to do and that's working. So I think this is another thing that can work very well.
I mean, we're just at the start of the trend, right? MadeSafe or Mastercoin, MadeSafe were the first sort of birds in that game, but now we're seeing like 10 different issuances on this platform, 10 issuances on that on one platform, and we expect hundreds of issuances until the end of the year. Just like we're showing the capability, and every new entrepreneur that sees what the 10 entrepreneurs before him suddenly wants in on the game.
Yes. And then when I think of Ethereum, I still remember the first time I read the first white paper by Vitalik. So I'd spent a bit of time reviewing some of the colored coins documents, and I'd seen his name and sort of fingerprints all over them. And then out of nowhere comes this, I wasn't expecting it, comes this white paper where he has a critique and then paints this vision. And the first 4 or 5 pages are really quite compelling vision of the future. And then there's 20 pages of detail at the back that I didn't understand. And presumably you were a reader of that, which motivated you to join. So what was the driving ambition that made you think this is what I'm going to spend all the time on? Because I guess you're a founder, but also there's a vision coming from Vitalik as well, I guess.
I think many people are drawn to Ethereum for a number of different reasons. For me, originally, it was the wanting to implement the technology to see if it could work, and learn a bit more about the blockchain. But I think the one sort of overriding vision, a basic idea, is to bring a notion of fairness, honesty, and transparency to throughout society, throughout the world. So in the same way that Bitcoin kind of touches on that in terms of finance, where we can sort of start to understand how society spends its money, how money flows through society. With Ethereum, it's, in a more general sense, how people interact, how people agree, what arrangements are made between people, how society interacts with itself. And we want to take the fairness and the honesty and the transparency that Bitcoin brings to currency and just put that to the entirety of the dealings within society.
Fairness, honesty, transparency. I'll write that one down. Excellent. That's a vision to back. It's good. Something that I've seen is common to all three, and I bring Ron in because I know there's something on your blog a few days ago, is the sense I get is it's taken all the projects in this decentralized application space longer to get to where they're going than they expected at first. So you look at the colored coins papers, it's taken a long time to find a way to send Bitcoins through the network that retain their color. And similarly with the various iterations of Ethereum, but we're getting there. It sounds like obviously Mastercoin is up and running, but even there you've gone down several lines, you've started, you've stopped again, and then now it seems that there's a spin-out project, or there's the wallet I saw on your blog earlier this week. So tell me a bit about that, what you've announced there.
Yeah, So on which of that you addressed?
So primarily on the wallet, because it sounds like you almost ended up with something that wasn't part of the original vision, so you've now spun out, but I didn't quite understand whether that was part of the plan to start with or what. So maybe explain to people what it is you've announced and then where it came from.
We have the base or the primary wallet to use for Mastercoin is Omni Wallet. We built that as a web wallet from the ground up to really support Bitcoin, Mastercoin transaction, crowd sales, all this cool functionality. But since we were designing the wallet from day one, thinking there's going to be tens or hundreds of currencies issued on that, now we want to take it to the next level and really be home to all different currencies out there, not just Mastercoin currencies. Right? There's literally hundreds of altcoins these days. There are other protocols, Counterparty, Ethereum, Counterparty, Ripple, all of these coins. And we feel it's a bit redundant or even silly that users, consumers, have to use 5, 10, 20 different wallets to store their coins. So we want to take Omni Wallet to really branch out and not just be about Mastercoin, but to build it as a for-profit company. And we're actually looking for a CEO to lead that company right now and solidify. We have the technical team. We're focusing on the master protocol of the Mastercoin. We just want somebody to come and bring that and take it to the next level.
And that's intended to be a consumer wallet, so an average person would use this Omni Wallet.
Definitely. It's like the blockchain.info or the Coinbase of altcoins and Appcoins.
Got it. Okay. Well, I've got one last question, but in the last 3 minutes, anybody with a burning question? We've got two. So let's go to yours. Let's do you, and then we'll go to the guy in yellow at the end.
So when you talk about being an exchange or a place where people can buy altcoins and other assets, you also spoke about being independent of third parties. How can those two things happen?
Independent of third parties?
Yes, you were talking about it, and so were you. You were talking about the fact that you would be able to buy it. You'd be able to, with altcoins or colored coins or master coins, to represent other assets. Mm-hmm. But those assets, and they have to represent real assets, right?
So they have to be issued by somebody who has an identity and is an individual.
Exactly. So there has to be a third party that has to be established and for you to work with, right?
So maybe I can take that. So we're seeing, it's an evolutionary process, right? We're seeing the first steps in terms of real coin and backing, with US dollars or other companies issuing coins backed by gold, backed by land. This is the first evolution of that. But the grander vision has always been to also allow completely trustless mechanisms to do that. And we have ideas on that for a long time. We're just developing them sequentially. But the idea is basically to take two parties. I want to buy some Google shares. You want to sell or to short some Google shares, and we can enter into a financial contract without any one of us actually owning the shares. And the protocol ensures that if the shares move, then you're liquidated or I'm liquidated accordingly. So it's definitely on the roadmap.
Okay, I suspect we could probably spend another 10 minutes on that one. And really quickly, there's a question in yellow at the end, in the last 2 minutes.
Hi, I'm Emmanuel from Pianova. I have a question regarding Appcoins. So there are a lot of assumptions being made on infrastructure. I draw the same similarities to what we have in video streaming in America, where people now want to start charging for types of traffic. So what do you guys have in mind in terms of working with miners or other companies in the future to ensure that that infrastructure is not pulled from under your feet?
Yeah, so Peter Todd has actually done a lot of work on that. It's something it's already on our minds. It's not a burning issue right now, but I know that some miners, there's political issues. Some miners don't like these different types of transactions. Some slow them down. Some flat out just ban them. The whole point here is to really take the protocol and evolve it in a way that's obfuscating everything that's going on. So you would essentially have to run a full Mastercoin node in order to know that these are Mastercoin transactions. So this is more research, long-term work that's being done.
But you are dependent on the miners accepting your transactions and not, so either being neutral or not charging you unnecessarily high fees. Maybe just get the last word to Flavien.
Yeah, so Bitcoin is kind of sold as a decentralized system that's fair and very open and transparent. But doing something like rejecting some transactions, the miners rejecting some transactions, is it's a bit like censorship. So ideally, every transaction should be equal, and every transaction, as long as they pay enough fees, they should be able to be included in the blockchain. That's my opinion, but I know some core developers don't agree with that. But
it is a risk that you just have to deal with, I guess. Yeah.
Yes.
Okay, we're out of time. So I guess freedom, honesty, transparency. I'll remember that one. Thank you, everyone. Thank you to the panel.
All right.